Welcome everybody. This is the Thursday evening Viper Trading webinar. If you are here to learn about trading the futures markets using the Viper tools, you're absolutely in the right place. Knock our standard disclaimer out of the way real quick here. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, excuse me, are to be construed as investment or trading advice. And of course, everyone in here tonight knows that you do trade at your own sole discretion. Okay, well, most of you know, of course, that I'm going to show you, I'm going to start off with something that I ended with last week that I think a lot of traders, I got a lot of good feedback on this, and so I'd like to share it with the team here again tonight. So some of you might not have been here to see this. And this isn't something you have to do, you know, all the time or every day. It's something that I keep tucked away on the side, and I occasionally sort of glance at it. And what it is this. Let me just show you on ES. I know a lot of you don't trade ES, but you can put this on any instrument pretty much, and you might find it helpful. And if you don't even bother. Let me just show it real quick to you. This is a 30-minute chart of the E-mini S&P. And what we can make note of here is that, let me just show you real quick. And I think, unfortunately, some of these numbers are a little, no, I corrected it. Sorry about that. Open of the market would have been right here, 6:30 Pacific. Right here. I'll put it at 6. Otherwise, it skews. 6:30 is actually technically right here. Okay. And I'll put the 6 o'clock thing here because I want to show something at 6:30, right when the market opens. So up until about, I would say, over here towards 8:30-ish, 9 o'clock, what kind of programs were kicked in on the equities? And I'm using ES as a proxy for all the equities. That would be the Russell, YM especially. It's tied very closely to YM. Is almost, those two are interchangeable, except YM of course moves a lot more, and it's $5 a tick. What kind of programs were running against the equities this morning right after the open and until about 8:30 or so? Were these buy programs, sell programs? What was running in here? Right in here, I'm circling it. Sell programs. So I want to just quickly highlight something here, because most of you probably know ES is the most liquid market in all of futures that are traded. Here is your volume bar at 6:30 to 7. I would venture to say it's probably, I don't know, maybe couple thousand contracts. Here's your volume bars at 7 and 7:30. You're looking at, well, this one's almost 200,000 contracts. This one's at 250, and this one's at 200. So you have 650,000 contracts changing hands in about an hour and a half, and it's pretty clear on this chart what direction the computer programs were running. Sell programs, big time, right here, 7 o'clock. Now, you know, you can trade 6:30. In fact, I'm going to drag down an ES chart, and we'll do, you know, we can do this on other charts too if you want. It's a nice handy little thing. I wouldn't, like I said, put a whole lot of time into it. You can just sort of tuck it in the side and kind of glance at it a little bit if you want. I've started to find it helpful. I'm not taking any trades off of here. Just to be clear, I'm not saying that you trade off of this chart. Absolutely not. That's not what I'm saying. What I'm saying is that sometimes early in the morning, in the first hour and a half, this little chart here can give you a pretty good guide as to, you know, if you're struggling with trend direction, you know, is the market, are the big boys selling off this morning? Are the big boys buying this morning in that first hour and a half? And this gives you a good idea of what direction you probably want to look at taking on your trades. So let's drag an ES chart down here and look at this morning as an example. I'm just using ES because there's a lot of volume there, and it really illustrates this point very well. We'll see if we can get it to load on some other instruments in a second here. Oops, I didn't want that. Tuck that on the side here. Just get that. Everybody kind of remember this, right? Cell programs. Huge volume, right? Let's go get this off the chart, off the screen here, and drag over the ES chart. Now, what do we notice happening? Let me blow this up so we all get a real good idea of what's going on here. 630 on this market is somewhere right about, the open was right about here, you know, plus or minus a couple of minutes. All right, now I'm going to ask a question, and I'll help you out here. I see in the time swath that we are talking about, which is 6:30 at the open all the way to 8:30, remember we said? I see 1, 2, 3 trade setups. Now what I'd like to do as an exercise here is find out if everyone in here tonight can name either time-wise, and I'll blow the time up so it's real clear. Time-wise, where the shorts set up, and this is part of this whole notion of being patient and waiting for the trades to come to you, because there is several trades on here. And then we're looking all the way, this swath of time right in here, where I'm circling with my cursor. So you can call out a time where the shorts set up, or a level. The levels are right over here. You know, up here you see you got 78, 72, you know, on down 62. You can call it out with a level or levels or with a time. Just go ahead. I'm going to give you 30 seconds to type in the short trades on this chart. The short trades that you see setting up on the chart, time-wise. So call out a time. I see three trades on here, 3 short trades. Or level-wise. Here, I'll blow the levels up too so you get a real good idea. So hopefully that's real clear. You can see the levels real well here, and then of course the time is down here along the bottom. So we're not looking beyond 9 o'clock, so we're not paying attention to the right-hand side just yet. We will eventually look at that, but I'm going to circle back here, and so it's basically the first hour and a half, 2 hours. Where do you see the trades? 30 seconds on the clock. There's 3 good trades right here. By the way, some days, you know, ES can be very choppy, by the way. You know, if you want to add ES into your trading mix, you can. I would watch it. It doesn't have, the moves are not very large, but it is 12.50 a tick. Sometimes what I like about it is I'll be watching and trading, say, YM or NASDAQ or even occasionally the Russell. Excuse me. Let me get a sip of tea. Hold on. Like today, for instance, the markets in reaction to the news started to sell off and sell programs kicked in, and we saw that, right? And all those markets led ES. So what I'm saying here is that sometimes ES is a little laggard, and if you're watching the other ones break down and sell off, you can pretty safely go in and short ES and ride it down. Sometimes it's smoother. David D. Yeah, you can, you know, I would say it's another instrument, another equity to experiment with. Like I said, sometimes the other ones lead it, and they'll be breaking down and selling off like this morning. You can go in and safely short ES with a tight stop, and I'm telling you, usually 8, 9 times out of 10, most of the time it will follow the other equities. Yeah, it's a little slower, a little less jerky. Okay, I see some good numbers coming in here. David D, Doug, 630, 709, 849, good. 632, good. Mindy. Some levels out of Peter, 72, good. 69, Pat's got some good numbers. Chris, I like those times. There you go. And the levels, good for you. Pervez, Stealth at 750, and Lauren and Mindy. Okay, good. Excellent, most excellent. I see some folks are still coming in. Hey, Minaj, Kenneth, glad to see you can make it. We're still kind of getting started here. You haven't missed too much. You got a few people that have come in. Just a quick recap. we started off with a 30-minute chart just for to get a feel and a sense of whether the market is selling off or buying. And of course, you can see here pretty heavy sell programs engaged first thing at shortly after the open at 7 o'clock this morning. And so we circle back here to the ES trading chart, and we made note of. So the first trade that I see is shortly after the open, right in here. We are looking for short trades. Obviously, you can see a pretty nice one set up right up in here. So just use your stealth tools, use your OT. It's just exactly like the other instruments. There's no difference. It's an equity. So in this case, you could have used a region box at the mid band. You could have used some of the other tools, the line or the ray tool on the retracement to get in. They all would have gotten in pretty much in the same place. You know, close one of these bars right here. Yeah, boxing it. In this particular case, given what we were watching over here, was pretty clear you're going to want to on all three of these trades bias to the downside. Bias to the downside. Yeah, you would need to see some kind of reversal to really start looking for an up move there. Now, just to level set some expectations, as I said earlier, this particular instrument does not move quite as much as the other instruments, and so this whole trade was from here. You know, maybe you had a scalper target down here, and you had a little sort of a runner, and you stopped out on when it started to make its way back up. So, you know, let me get my little cursor out here and give you an idea, tick-wise, how much these moves are. So, you know, maybe you got filled at around 70 and a quarter-ish short out of the box here, and you could have easily got a 5 or 6 tick scalper target on that quick pop down, and then your trail got taken out here. I'm guessing somewhere around 67 and a quarter. So that's 3 times 4 is 12 ticks. Yeah. 12 ticks is a pretty decent, anywhere between 12 to 20 ticks on ES is a pretty decent move for you on those. All right, and then some of you had made note of the fact that this retracement up close to the midband and the roll over here was your second short setup on the chart. This would have occurred somewhere right around shortly after 7. All right, quick pop quiz, make sure everybody's still awake and pay attention here. What was the news event we had this morning? What was the news that triggered the sell-off? Anybody remember? Just a ref, don't go look. Right off the top of your head, what was it? What was the news that was serious impact, the red, serious impact, ism. Yeah, and we did have a PMI number. Just real quick, I want to show you this here. This is also for the new folks that are with us now. So yeah, so today was the first Thursday here. You had some jobs numbers, pre-market, unemployment claims, pre-market. And then here's your PMI showing as medium impact, low impact. So, and that was pretty much in line, slightly, just very, very slightly bearish. And then of course here was the big miss. They were looking for 52 and they got 49. Anything under 50 is very bearish. So of course, once the bots figured that out, they all kicked in their sell programs and down we went. So the reaction then, of course, was right here. We get this nice retrace up to close to the midband, and then we roll, and we get short again right in here. Let me take this cursor off. It's kind of messing things up a little bit here. Here's the short. Would have been filled probably on that bar right there. You definitely got a scalper right down into here with that fresh swing low. Right into here. There's your scalper. I'll put the scalper on the other one too, so we're real clear about that. So you're going to have to adjust your targets. You know, you can't. You know, very rare. I don't think I've ever seen ES like once in a lifetime run 100 ticks. Whereas the other markets, you know, it's not unusual to see 40, 50, 70 plus tick moves, 80 ticks. Not unusual on the Russell and NASDAQ and even YM sometimes, right? 80 tick, 60 tick moves. You're just not going to get that on ES. You know, you're going to get your scalper. You want to set that right about, 4, 5, 6 ticks, and then which would have been the same thing here. And then this particular runner, I'm guessing it went about maybe 20 ticks on your runner down into here. We'll measure it in just a second. Let's go ahead and measure that second runner there. Yeah, so you're filled, 67 and a quarter short on the close of that bar out of the box, depending on how you boxed it. It could have been a little tighter, a little bit looser. I'm just going to use this bar right here. So if you set anywhere around 710, 714 at around 67 and a quarter on your short call, waiting for this retracement, that was good. And your trail got taken out down here. Looks like it would have been somewhere around 58-ish. Maybe the close of that bar right there, 58. So what is that, 58 to all the way back up here, 58 to 67 is what, 9? No, yeah, 9, right? 58, 9 times 4, 36. Okay, so that's a big move for ES. That's a big move, 36 ticks. I normally set my runners at 20, but in the case with a precipitous sell-off like this, you can always drag them out of the way and then take your stops. You use that new feature on OT with the trailing stops that track the lines. That's very, very new. Gary's been playing with that. I know the programmer just finished it up. I don't even have it yet. I should have it shortly. I can start playing with it too. But yeah, that's a huge move, 36 ticks. Normally you're on a runner, you're going to want to look right around 20 ticks, plus or minus a couple, 3, 4 ticks. And then if you said that there was another short setup right here, the third short was right in here, where we being patient, we stop out of this second short. And if you were still trading, we closed the room by this point. This was around 8:32 Pacific, roughly, 8:30, 8:30-ish. You did get one more short out of the box here off the midband, and it did give you a little scalper. And then the runner, the runner obviously stopped out. Right in here. There's your little scalpy. And then now, when we get the scalper, what do we normally want to do on our object trader pop quiz to see if anybody remembers that? What's the one thing that we like to do in object trader to, and I'll just help you out. So we'll just play these trades out here. I'll use this one because it's important on this one that we do this. Okay, we're filled on the close of the bar here. Let's say we get our 5-tick little popper, our little scalper 5-ticker. We get it. And so let's say that your original stop is 10 ticks. So that would have been sitting, 10 ticks above 58 would have been, let's see, 260. It would have been somewhere up in here as your initial stop if it was 10, say 10 ticks. Just use some round numbers. What is the feature that we use in Object Trader once we have achieved our scalper target to prevent the fact that if we don't do this, we're going to get a full stop out on the runner? What's the feature in Object Trader that we use? I'm hoping that most or all of you are using it, or at least experimenting with it. There's a feature in there that we use to prevent getting a scalper. This condition, exactly what you see right here. Get the scalper, and then you get a full stop out on the rest of it. We don't want to do that, right? Go into sim. Yeah, you could do that, sure. Yeah, exactly. It's called the break-even plus. Break-even plus 2. There you go. Hi, Diane. I didn't see you come in. Hey, Dennis. Yeah, so you want to get that break-even stop down. You're going to work with your instrument here. You get comfortably 2, 3 ticks, 2 ticks, 3 ticks behind your entry there. So what this does is that the second contract or multiples, whatever you have left on, will get stopped out for a very small loss. However, you did get the scalper, so net, you did have a very small gain here. Very small gain on this trade. Yeah, so 3 winners. 1, 2, 3, based on our analysis of the trend, which of course was down. We glanced at the 30-minute just to take a quick peek to see if sell or buy programs were running. And then of course we knew that at the news, was very bearish, and the market didn't like that at all and sold off across the board, pretty much across the board. Good. Most excellent. So over here to the right, let's just go ahead and finish this out. We've clearly gone into a range here that has some fairly well-defined support and resistance levels. Here you can see, of course, it comes right and just touches and kisses the mid-band and bounces very nicely right there. See that? And then where's resistance on this range? Yeah, a couple of ticks above this 68 up here. So let me ask this question. If you were trading this range, let's do hypothetical. It's after hours, and so we wouldn't be trading this range. But let's say that tomorrow morning this range sets up. It doesn't have to be ES. Let's say that this range sets up on whatever you're trading. Let's say it's the Russell or NASDAQ or YM, whatever you're trading. Could be oil. Whatever instrument you are looking at, or gold. It doesn't matter, any instrument. And the pattern looks like this. Is your primary mode of entry to buy? So you're buying the market. Sell, which B would be buy. Or you can just type buy in. Sell is S, so you're shorting the top of the range as your primary mode of entry. Or both. In other words, you're shorting the top and you're buying the bottom. What's your primary mode of entry? Buying, selling, or are you trading both sides of this particular range? I'll give you 15 seconds to ponder that and type in just type a letter in. B for buy, S for sell, or both for both. 12 seconds. We all should know this one. This is a no-brainer. You buying it, selling it, or both? Trading range. Your trading range looks like this. Doesn't matter what the instrument is. What are we doing? Time's up. You're buying it. Good. You're buying it. You are buying support. Now let me show you something here, and this is sort of a continuation of what I was showing before. Now granted, this is really choppy in here. This afternoon got really choppy on ES, but after the sell-off program's finished and you know, Wall Street gets back from its 4 martini lunch, what do we think happened right here? What is this? What happened with this puppy right here? And another one, you got another one right over here. Market's still selling off. Buy programs are kicking in. And normally, and here's how I've come to watch this, and you can, like I said, you can do it too. You don't have to. It's a sort of a. We all know that when, you know, markets rarely just go from down to up and have a V top and a V bottom. It does happen occasionally. Normally there's some capitulation that occurs, and that occurred right here when it's not necessarily buy programs. Buy programs are overwhelmingly buying the market as opposed to or selling it. So it's driving the price in one direction or the other. However, before you change from sell to buy programs, you need to do what? Some short covering. That's what this is. This is short covering. That's all that is right in there. How do we know the difference of whether they're running a buy program and this is short covering, or a buy program has kicked in? Why am I saying that this is just short covering only? What is my justification for that? How do I know? Might we know that this is simply short covering and not a buy program just yet? Take a look at what you see here. How do we know? What's the difference between the candles that look like this and a candle that looks like this and looks like this? What's the difference between these two candles and this one right here? Long wick, smaller volume, rejected the bottom with a long wick. It's got a long doji bottom. So what was happening there is all the cell programs are starting to cover, right? They're starting to cover right in here. And they're putting a bottom in. Here's the other critical thing to look for, is it stays below this swing right here. In my opinion, when this critical level is broken to the upside and you have that much volume pushing it directly up, there's your buy program right there. That's it, kicking in and running right there. Yep, short covering, putting in the bottom, indecision, next candle, right? Sitting just under the swing, not heading back down. Cell program's not running anymore, and they flip it and they run it all the way back up. And so what you see with that is what you see right here on the right. Let me see if I can show this somewhat together, and then we'll get on to something else. This huge candle over here to the left is this one right here, is this area right here. This is this. That's the buying that's going on right there. And then we get some consolidation up here. So your answer to the question on the range primary mode of entry is buy. We're getting long. We're getting long in here. We're buying support. I mean, not only are we getting support from the buy programs that we can clearly see are running, however, we see that the background is green on the trading chart. The bars are blue. Even though we're sideways, we're somewhat stair-stepping up, and so the primary mode of entry is buying the bottom of support, taking profits on your long trades up at the top of the range. So you had a buy right here, and you had a second buy right here. Now, you know, that's the other thing I like about ES sometimes, is that if you find that sometimes, like NASDAQ is a good example, is not respecting swing levels sometimes, like it can get really messy trying to trade NASDAQ some mornings. Like you go look for swings to get in, and it's just, you know, it's not respecting anything. It's blowing right through the mid-band, jerks up to a fresh swing, right, pulls back. You're looking to get in. Some day, not every day. Some days it's real smooth, but it's somewhat unpredictable. All right, good. Good deal. Okay, most excellent. Let's do this. Let's shift gears. Let me put on pause here, and I want to drag another chart down. I think everybody got that. That help? Is that helpful? Let me shift charts here. See if I can get something else up here that you can hopefully find helpful. All right, let's do a similar exercise with crude oil. Just looking at this chart right here, glancing at it on crude, just give me a second and I'll be putting it up momentarily for you here. I'm getting it organized. Hold on a second, please. I'm having some technical problems here. Here we go. So this morning, between the pit open here, which 6 o'clock would have been somewhere right about in either this candle here or this candle right here, was the crude pit open at 6. And I know you were trading. I know Gary opens the room, you know, 5 or 10 minutes before the pit open at 6, and I know you, everyone in here that trades crude. How many of you, just quick show of hands, how many of you trade crude in the morning early with Gary? Anybody in here tonight? Anybody trade crude? Hey, Walter. Oh, you snuck in on me. I didn't even see you come in. Diane, Pat, quite a few of you do. Well, we can use these price patterns. They work. I love getting all beat up on crude. Well, you know, I have an old saying about crude. It's a stern taskmaster. It really is. I mean, of all the instruments, if you're on the wrong side of crude, it can beat you up pretty good. And $10 a tick, if you put a couple of 3, 4 multiple contracts on, it can smack you around pretty good. But if you're on the right side, the flip side of that is that it can make you money. If you're on the right side of crude, it can make you very good money. Yeah, absolutely. So what kind of programs we're running here this morning on crude? Here's the pre-market area. Were these buy or sell programs running against crude this morning based on this chart that you see right here? All the way over till here. This is crude close right here. This huge bar right here, 40,000 contracts. Buy or sell programs running against crude this morning. Sell programs, right. That's very clear, obviously, because, you know, it doesn't take a rocket scientist to see that the trend was down. All these bars are closing down. Trend is clearly down without question. Huge sell bars. Look at this one here, 730. 60,000 sell contracts. Boom, look at that candle there. Down she goes. So if we're looking for trades on crude this morning, what type of trades are we looking for? Shorts. Yeah, we're looking for shorts. And so let me get a crude chart down here, and let's take a look at some opportunities that may have presented themselves on the short side this morning. Stand by. Get the crude chart down here real quick. I know some of you trade gold. Some of you trade the currency markets, 6B, 6E, dollar index. I know quite a few of you trade the dollar index, DX, also $5 a tick. Yeah, you can put this pretty much on anything. You can put this pretty much on anything. The same little exercise that we're doing right here, right now. Okay, let's take a look at crude, knowing what we know from that previous chart. And of course, you can see on the trading chart here that I'm going to just get the 6 o'clock pit open on here real quick for you. 6 o'clock would have been somewhere right about in there. So for those of you that were trading with Gary this morning, do you remember if you caught this short right here? Were you able to catch this short? This would have been right when he was opening the room. Short. Sorry about that. Thought I had my phone off. Stand by. Gary caught it. You guys caught that? Okay, good. Yeah, you caught the short right here. This would have been right pretty much when he was opening the room, right here. You got a little setup. You had come right off a little bit of a retrace up close to the mid-band here. You know, you can see in the pre-market session, oil was just selling off. Red background, all the bands stair-stepping down, mid-band, hitting the mid-band, rolling over, hitting up, rolling over. So yeah, this was a beautiful short right out of the gate for you guys and gals, right here. That was a nice drop too. You're looking at probably 40 ticks right out of the gate. One contract, 2 contracts. This could have been your one and done right here, right out of the gate. Now, you missed it. Some people missed it. Gary caught it. Okay. You had one more setup right at 6:30 here on crude. You can see this little mid-band box set up here, which did give you a scalp. Now, it didn't come back all the way to the swing low, but it did stop out. You got a scalper out of it right here. And then this looks very similar to that ES pattern we looked at, where you get the scalper and then you get the break-even plus on your trail, so you don't get the full 10, 12 tick stop, right? So you get that initial stop down close to your entry, so you still make a little money on this thing, even though it starts retracing. Now I have to say, and some of you might find this frustrating, on any chart, let alone crude, is that you noticed over here you started to get a little bit of a series of higher highs and higher lows as it sat on the midband. If you had boxed it here right around 7 o'clock with a downward bias, you would have not gotten long here. However, if you allowed it to take both sides, you could have actually popped some very quick little short popping longs off of these boxes if you allowed your region box to trade either way. Now, in the other way, I want to speak to this right now, because this is always a question. We get this always coming up. How do we handle trading these markets when you've had a very precipitous sell-off? And let me know if anyone in here feels this way. Okay, we got this huge sell-off, monster sell-off, short. We get stopped. We get a scalp, gets stopped out, comes back, sits here, does not roll over and continue down. And we even get a background change here. Now, is this area right here a change of trend? Yes or no? I'm circling with my cursor. Just type in a Y or an N. Is this area right in here that I'm circling with my cursor a change in trend? Yes or no? No. What's our rule of thumb? Now, there's different terms for it. You can call it the outermost band. You can call it the phantom. Is right out in here, right out up into here. Now, what I want to be clear about this, it's got to stay pretty much within the outermost band, and you have trend continuation. So, what I'm saying, and I want to just be very clear on how I'm addressing this. Okay, if you had boxed these in here, allowing both sides, to the long and short side, to trade, yes, you would have gotten long. Same with this right here. The short never filled. It never broke down, right? The other way to look at it, if you're trading with the trend here, is that you should be rightfully shorting the rollovers up at the phantom, outermost band. So you're actually shorting this up here. Now let me ask a question. When you have a market that's doing what it's doing, so you're getting blue bars, it's holding the mid band, it is coming up and rolling over out here. Do these shorts make you nervous when the market's doing something like this? How many of you, these shorting up here makes you nervous because you're starting to think, looking at the price action in the background, that you might be getting a trend change? So you're nervous shorting up in there because you're afraid if it doesn't roll and go back down, you're going to get stopped out. So you tend to avoid and not take that type of trade. Is that fair to say for any of you in here tonight? I'm talking about the shorts up here on the rollovers. Because you start seeing this over here. Let's pretend we don't know what in the end, the resolution. Let's go back here and let's just pretend like we're watching it in real time. Yeah, that's an issue. I know it is. I know it is. It's a struggle. I would suggest trying to work through that and take those, because sometimes you get some very nice trades up in here off these phantom rollovers in the direction of the trend. The one thing that might help you, and I don't know if it would help you or not, and if it confuses you, by all means, don't use it, is the fact that you had this sell-off going on the bigger picture here. All these huge sell, down volume, just enormous down volume. This little choppy area right here above the mid band is this bar right here. Now, what do we say on the ES chart when we had a bar that looked like this? What do we say about it? Did we say that was, oh, for Pete's sake, this thing is driving me crazy. Hold on one second, please. I'm trying to show this. Oh my goodness, give me 1 second here. Remember the ES chart? Just not even 15 minutes ago. This stupid thing is not going to let me draw a box around it. There. What do we say? Is this buy programs or short covering? That's right, short covering. That's exactly what that is. How do we know it's not buying? How do we know that this is not a buy program? What was the conditions that we looked at on the ES chart when we saw exactly the same thing? Right? This swing holds, this resistance swing holds. Right? If this was a buy program like the other ES chart where it powered up through it, does everybody remember that? We just looked at it like 15 minutes ago. Remember the swings on the bars? Remember that bar came up and just powered with a huge blue, just a huge, enormous amount of buying, and the bar powers way up like that? Yeah, the volume did not take out the previous candle. This volume, if in fact a buy program was going to kick in here, this bar would be as big or bigger than this one, right? And it would power up through the swing and just take this out, and who knows where it would go all the way back up, and then you'd see a series of blue bars and huge blue volume pushing up back up into who knows where it would go, right? But it didn't do that. This is just simply short covering that right in here. And that's what this is. Let me put it in perspective if I can without messing the chart up too much here. Just to try to get this thing organized in the right spot. 1 second, please. So, and this is especially true for those of you who, and what I'm trying to speak to here is two things. The first one is the group of you that rightfully feel nervous taking shorts in here at the rollovers at Phantom. I'm trying to reinforce your comfort level in the fact that as long as this 4380 level in here holds, you know, 4340, 43, you know, anywhere right up in here, as long as these resistance levels hold, you know, the trend is still down and you're still trading the short side, no question about it, even though you have a slightly mixed candle there. That area right there is right in here. That's this area right here. So the trend is still down, even though you got a green background pop up here and you're rolling over from the mid-band, you're actually taking shorts here and you're covering at the mid-band. That's your primary target. Now, if you didn't take those shorts and you didn't box in the long and you didn't box in and get the long trade because you had to open both sides, you get one more shot right here. And this would have been right at about 712. So you're just a little bit off of just right after the news. And at the same time that this was sitting right here, what was happening with the equities? What was ES and NASDAQ and YM and the Russell doing when crude came back here shortly after the news? Let me get this out of the way here. What were the equities doing? Selling off. Huge ISM number, horrible ISM number. Equities tanking. Now, if some of you might have noticed this, that some days, not all days, but most days, crude oil is very highly correlated to the equities. Like the other day, remember, I think it was yesterday, when the crude oil inventory came out, and it was horrible. They expected, what was it? I don't remember the number. Here, I might have the numbers right here. Yeah, here it is right here. Here. Remember yesterday? Yeah, remember that? Here it is right here. Where is it? Yeah, here it is right here. Crude oil, 730. Expected a build of 1.1. They got a build of 2.3. That's huge bearish. Huge bearish. Remember the sell programs yesterday kicked in? They slammed oil. And what came down with it? All the equities. They slammed everything across the board. Selling, just pumping. Sell programs pumping. So you get that a lot. You get that a lot. I have to tell you, I feel the comfort level taking a short on crude when the equities are selling off, and vice versa. If crude is tanking, there's usually a very high percentage of time that the equities will follow. Right here. Even if you box both sides here, you did not get the long on this one. For those of you who shorted Phantom, you were already short from up here. And you're already taking scalper coin right at the mid-band. See it? And then you just get this monster slam sell-off. And then what happens right over here, right before 7:30? Anybody see another trade? Where is it? Right there. So you had quite a few trades on crude today. There was a lot of nice movement. You had right at the pit open, you had the nice short right out of the gate. Could have been one and done for you. You had a little scalper that maybe eked out a few ticks. You didn't get much there. We discussed that in the in this range, it's quite possible, depending on your approach, you could have actually traded both sides. You could have been popping the longs off of the mid-band here, or shorting up near the Phantom on the rollovers, which is actually in the direction of the trend, is the short side. But I understand that some of you are nervous taking these Phantom trades after a big sell-off like that. And then the follow-on nice, excellent trade here shortly after the news was the box that gave you just a textbook beautiful short right here. That could have been one and done. You could have missed everything and just caught the news move and still just made, this was beautiful. This was 44.10. I think we caught this in the room. This is like a 30-tick drop right here. A couple of contracts, that would have been around $600. One trade, bam. You know, or a scalper for 5 or 6 plus 30 ticks, $350. You know, what I'm saying is you don't, when we talk about patience in trading, there's a lot of different ways to interpret patience and waiting for trades to come to you. One of the main things is that you don't have to feel rushed. You don't have to feel pressure like you got to get in and out of the market and you got to get in and out and you got to get all these trades. You really, here, I'm going to offer a tip for everybody that has stuck around and is listening tonight, is try to find, out of all the trades that we have on all of our setups and all our charts with all our tools, including Object Trader, just find 1 or 2 good trades that you like and you do very, very well. And then just perfect those. Find 1 or 2 instruments that you really like. If you notice, Gary trades 2 instruments. He trades the Russell and crude. That's all he does. He focuses. And when you get focused on an instrument like that, you really learn the price patterns. You get familiar with it. Of course, you know that I trade primarily NASDAQ and YM. Of course, I showed you I do trade ES as well. I keep that chart in case I see something working out over there. And occasionally, you know, I'll take a crude trade or a Russell trade. But I have the ones that I primarily focus on. So that's the key. That's really the key. Find 1 or 2 trade setups you like, stick with them and perfect them, and work those on instruments that you get really familiar with. And I just work them over and over again. That's how you make the money. Well, I'm going to go ahead and wrap up. Any final questions here? Yes. There's a question here from Pervez. How do we make ourselves more comfortable taking the Phantom trades with a rollover and being nervous that this is going to flip and come back in our face and stop us out? You know, that's a great question, Pervez. Let me make a suggestion on this here. When you're taking these Phantoms and you get the rollover and you're in it, you know, and if you have multiple contracts on, say 2 or even 1, and your initial stop is up here somewhere, just crank that stop down real tight. Or you can put it right here. Say you're filled on one of these bars right here. Just keep a very tight stop on it. You can't be afraid of the fact when you take these trades that it might bounce here and come up and take you out. And if you have fear and trepidation around this, then all you got to do to work out of that is just take your stop down real tight. Okay, just take your stop down real tight and don't let it bite you for the full deal. That's the way to handle that. That's a good point, Pervez. Thank you. I appreciate it. Final questions here. Okay, so just a heads up. Tomorrow is Friday. It is the Labor Day weekend, so we will not have a there's no webinar on Saturday. Of course, we'll be shut down for the whole holiday weekend. Monday, there won't be any trading. We won't have a live room. There'll be no webinars, nothing on Monday, which I think is September 5th. What's Monday? Bank holiday, yeah, Monday, September 5th. That's Labor Day. Yep. And then we'll be back bright and early on Tuesday. Okay, Chris, thanks for coming, everybody. Appreciate it. Walter, have a great evening. We'll be back at it tomorrow morning in the live room, of course. I'm going to stop the recorder.